Hello and welcome to the walkthrough video for chapter 12. I have one problem that is so comprehensive that it covers all of the topics that you are going to see in your homework assignment for chapter 12, and that is exercise 12-7. So if you don't have your textbook, pause, go grab your textbook and come along with me. Again, it is exercise 12-7 on page 456. So what I typically like to do in these videos is model for you what I want you to do. So I know you know how to read, I know you're following along, but I have to read it to get it in my mind to make sure that I'm answering what the question wants me to answer. So bear with me. On March 1st, we have Eckert and Kelly forming a partnership, and Eckert contributed $82,500 in cash. Kelly contributed land valued at $60,000 and a building valued at $100,000. The partnership also took Kelly's $92,500 long-term note payable associated with the land and building. The partners agreed to share income as follows. Eckert gets an annual salary allowance of $25,000. Both get an annual interest allowance of 10% of their initial capital investment, and any remaining income or loss is shared equally. On October 20th, Eckert withdrew $34,000 cash and Kelly withdrew $20,000 cash. After adjusting and closing entries are made to the revenue and expense accounts at December 31st, the income summary account had a credit balance of $90,000. So that means that's net income. Let's see what they're asking me to do. Number one, prepare journal entries to record the partner's initial capital investments, their cash withdrawals, and the December 31st closing entries of both withdrawals and income summary accounts. And number two, we have to determine the balances of the partner's capital accounts as of December 31st. So in this problem, we're going to get to see the entries for admitting partners or forming a partnership, I should say. Entries for forming a partnership, the entries for withdrawals when those owners take money out of the business. We're going to get to see the allocation of net income using the method, the multiple method, the one where we have salary allowances and interest allowances and any remainder being allocated. And we also get to see the closing entry that will be made as a result of that allocation. And finally, we get to see how to calculate the partner's capital balances. Or in essence, what we are basically doing is creating a partner statement of partners equity. Now, Excel is an integral portion of this course. This is why CIS 107 or Excel OAT 152 was a requirement for this class. So sometimes I know when I'm working in Excel, because I like Excel so much, it's familiar to me, so I zip right through it. But you guys should have at least a baseline on how to work with Excel. And I really want to encourage you to do your homework assignments in Excel. Sometimes it'll be beneficial for you to do your homework assignment just on paper, and those are usually the ones where I record them. You'll see me working at the board, but when it is more beneficial for you to do it in Excel, that's when I'll do the walkthrough video using Excel. And I'm going to show you a couple of my tricks. I'm sure you have better tricks than me, so don't feel obligated to do it the exact same way that I do it. It just makes my life easier in terms of creating my journal entries. So typically what I like to do is resize my columns to prepare my spreadsheet to use. So normally I try to make it bigger so that you guys can see it using that plus button at the bottom, that zooming button. But I usually make column A a bit smaller because that's going to hold my date. Column B, I make a bit smaller as well because that's going to hold the account that I'm debiting. Column C is the account that I'm crediting for when I'm doing my journal entries here. So I usually make this longer, and then I don't have to worry about making sure I indent. I don't have to go in and type in spaces in the C column or in the C2 cell when I'm ready to enter my credit account. For column D, I like to make that one small only because it works out with my spacing. So I make that even smaller than A and B. And usually I plop in my dollar signs. Over the years, Excel has become increasingly better at formatting numbers using that accounting format. So if you want to use the accounting format, you certainly can. Just make sure you don't have dollar signs by every single number in the column, just first one and last one. But I like to have that extra column there. And then E and G is where I'm going to put my numbers. So I usually format those as commas using, again, that accounting setting, but without the penny, so I decrease the decimal. So I'm formatting it as a comma, and then I decrease the decimal. All right, I know what it's like to take a class and somebody's showing you how to use Excel and they zip really quickly and you're yelling like, slow down. So if you need to pause, and I'll try to be conscious of that and not zip through every single thing. But in this first entry here, we have to do the entry for Eckert and Kelly forming this partnership. We know that Eckert brought in cash. So I know I'm going to debit cash. Let's deal with what I know. Do they give me a date? Yes, on March 1st. So I'm going to enter a date. My cursor so that you can see. I know that I am debiting cash for $82,500. Let's see what else I have. Now, you can do this as 3 separate entries, but I like to do it as one big entry. It's going to make my life easier. And Kelly brought in land valued at $90,000. So I'm going to debit land for $90,000. And a building valued at $100,000. So I'm going to debit building at $100,000. Kelly also has a long-term notes payable, and we know that notes payable is a liability, has a normal credit balance, so I'm going to need to credit notes payable for the $92,500. Make that a tiny bit smaller. Now it's time to credit each partner's capital account. So you've seen this entry before for when an owner starts a business, makes the owner contribution. You debit cash, you credit capital. But this time each partner needs its own capital account. I know that Eckert only brought in the $82,500 in cash, so I credit Eckert capital for that amount. But Kelly was fancy. Kelly wanted to bring in land, a building, and a notes payable attached to that. So to calculate this number, and I'm going to show you how we're getting this number here. We're taking, let's see, I think I have the wrong amount in for land. Let me double check it. Land should be 60, not 90. 60. So here, I'm just showing you how I'm going to calculate this number. I'm going to take the 60,000 in the land and the 100,000 as the value of the building. I'm going to add those together and subtract out the note payable. And that's going to give me the value of Kelly's capital account. I'm subtracting the notes payable, so I'm just entering in a formula here just to make my life easier where I'm adding land, building, and subtracting out notes payable. So even though Kelly brought in assets worth $160,000, because he brought in that note payable that was worth $92,500, his capital account is actually less than Eckert. So we do our description here to record partners' initial capital investments. And we're going to need those numbers later on, so it's important that we have that. So that takes care of A. In B, we also need to record their cash withdrawals. So we were told that on October 20th, Eckert withdrew 34 and Kelly withdrew 20,000. So on 10/20, each partner, the same way they have their own capital account, the same way they have their own withdrawals account. So we are going to debit Eckert withdrawals for 34,000. Not 340,000, and we are going to debit Kelly withdrawals for 20,000, and we credit cash for the sum of the two. So we're adding those two numbers together. And we put in our description to record partners' withdrawals. I have my apostrophe in the wrong place because there's more than one partner. Here we go. Now, the next thing we need to do, this is where it gets fun and exciting, because the next thing we need to do is to allocate we need to do the entry to close withdrawals in the income summary account. But before we can do that, we need to determine what portion of income goes to Eckert, what portion goes to Kelly. We're told that the income summary account had a credit balance of 90,000. So what that means is we've closed revenues to income summary, we've closed expenses to income summary. And revenues minus expenses gave us a positive 90,000 or a credit balance of $90,000, which means we had net income of $90,000. So this is where we need to set up the little table that I showed you as we were going through the PowerPoint slides. So the table begins with, skip a couple of lines, but it begins with net income. And I'm going to use a column for Eckert, a column for Kelly, and then I'm going to come over here and create another column for my remainder. Format it, call that remainder. Move my net income down. So in this process, the problem has to tell us how the partners share in income. If the problem doesn't tell us anything, then they share in income equally. We just split it in half. But in this problem, we are told that Eckert gets a salary allowance, and it looks like Kelly doesn't get one. They both get interest allowance of 10% of their initial capital investments, and anything that's left over is shared in equally. So that lets me know that I'm using that combined steps method, where I'm using sort of a bit of each individual allocation plan. So I'm going to start with my net income of 90,000, and then I'm going to deal with salary allowances. I mentioned this before and it bears repeating. You cannot be an employee of a business that you own if that employee is a sole proprietorship or a partnership. If it is a corporation, yes. But if it is a sole proprietorship or a partnership, no. That means when you are paid a salary allowance or a salary, how that gets allocated to you is not through a W-2 at the end of the year. It's through a tax form called a 10K, but that's beyond the scope of what we need to know. But it's really through how we allocate net income here. So Eckert gets a salary allowance of 25 and Kelly gets nothing, and that can happen. That's what they agreed to. Maybe Eckert does more work than Kelly. So now what we're going to do is take the net income that we started off with, and we're going to subtract out the salary allowance that Eckert gets, put my minus, and salary allowance that Kelly gets. But Kelly gets nothing. So I see that I have $65,000 left to allocate, because I want to know how much of this full 90 does Eckert get, how much does Kelly get. So let's continue. After we deal with the salary allowances, we next have interest. Each partner is supposed to get 10% interest of their beginning capital balances. So we calculated those numbers up here. So we're going to take 10 and we're going to multiply that times Eckert's capital balance of that 82,500. And then we're going to do the same thing for Kelly, the 67,500. Now we want to see how much we have left. So we're going to take this 65 and subtract the 8250, and then subtract the 67,000, the 6,750, 6,750. And we see that we have 50,000 left, which makes sense because when I add up those two numbers, I get 15,000. 15,000 minus 65,000 is 50,000. Anything that's left over gets divided equally between those two partners. So we have another remainder here, and I'm sure I spelled that wrong, and I did. Remainder. And in that remainder, we're going to take that 50,000 and divide it by 2. And we're going to do the same thing here. Take that 50,000 and divide by 2. If there are 3 partners, we divide by 3. And then we're going to take this 50,000 and subtract out Eckert's share and Kelly's share. And I need for this number to be 0. So my dash there, using that accounting format, tells me that it is 0. In accounting, we don't like zeros, we like dashes. So if you put a zero, we'll all go nuts. Make sure you use dashes. Then, for the last thing we need to calculate the total income allocation by finding the sum of each partner's income allocation. So we're going to add the 25 plus the 8250 plus the 25, which was essentially the remainder split in half. And we're going to do the same thing for Kelly. Now, when we add, and I'm just centering the E and the K here because it's driving me nuts that it's not centered. So I just hit that button right there. And I'm going to add in my single and double underlines because that's driving me nuts too, even though I just finished. So that's my top and double bottom border. But what I really want to make sure of is that when I add those two numbers together, that 58,250 and that 31,750, that the sum that it's showing me down here better be 90, because all I'm trying to do is determine how much of this 90,000 should go to Eckert and how much should go to Kelly. We did all of that work simply to do the third closing entry. In our third closing entry on December 31st, we are making income summary 0. Income summary has a credit balance of 90,000. So to make it 0, we need to debit income summary for 90,000. The credit to, and I'm going to actually try to link this because there's my net income there. The credit should go to Eckert Capital, but not for the full 90, only for Eckert's share, the 58,250. And of course, my entry doesn't balance because I have Kelly hanging out there too. So we want to credit Kelly Capital for his or her share. You know, his share. And I put my little description here. Close income summary to the partner's capital account. So that when you go back to look at this, you know what you are looking at in terms of this entry. On the test, I'm not really going to require you to do descriptions. In the real world, you never do a journal entry without a description, but on a test, there's enough stuff for you to remember without having to worry about doing descriptions. Now, there's one more entry that we need to do, and in this entry, we are going to determine or close the withdrawals account. To close the withdrawals account, we're going to debit Eckert Capital for his withdrawal, which I don't remember what that was for. Let me go back up to the top. 34. So we debit Eckert Capital for 34. We're going to debit Kelly Capital as well for 20. And then we can make these withdrawals accounts 0 by crediting them. Now, you could do this as one big entry, or you can do it as two separate entries. I like to do it as two separate entries because, as one big entry because we have to make life easier. Close withdrawals to capital. Now, finally, let's find these partners' ending capital balances. And I have already a column for Eckert and a column for Kelly. In doing this, we need to start with beginning capital. Then we add investments by the partners. And then we also add net income allocation. But we subtract withdrawals. That's going to give us ending capital balances for all of our partners. So we can also do this in total. So for our beginning capital balances, it was 0 for everybody. This was the first year of operations. The business didn't form until March 1st or March 20th, whatever it was, March 1st. Now, for the investments by the partners, we know that Eckert brought in 82.5, and we know that Kelly brought in 67.5. Now, we're going to add to that the net income allocation. So we know that Eckert had 58,250 and Kelly had 31,750. Finally, let's subtract out our withdrawals. Oh, I did my journal entry wrong up there. I'm sure you caught my mistake. That should be Kelly withdrawals, not Kelly cash. Withdrawals. There we go. Putting that in as a negative, so I remember to subtract it. And then we find the sum for each partner. And we also add across. And I like to turn this into a little plus and then expand the plus, and then that just copies all of my formulas for me. Or you can highlight this area and choose Control R, but I like to use the plus, whichever one floats your boat. But I know I'm on the right track because net income was supposed to be 90 and I had total withdrawals of 54,000. The sum of these two numbers, that should be 186. Let me make sure. Yes. So the sum of Eckert's capital account and Kelly's capital account, adding them all together, should give me a total of 186. So I put my dollar signs here. I didn't put my actual heading, but this is a statement of partners' equity. Now, the problem didn't tell me to do a statement of partners' equity, which is why I don't have my heading here. We were just asked to calculate the ending capital balances. Now, this should help you with the homework exercises, and I'm looking at my screen because I want to make sure that I'm telling you the correct homework exercises, specifically in exercise 3, where you're doing the journal entry for the formation of the partnership. That's that first entry. Exercise number 4, you're still doing an entry for the formation of a partnership. Exercise 5, where you're allocating income. That's what's going on here, and as well as the problems. In all those problems, you are allocating income. Some of them may have multiple steps. Some of them may only have one step. If you happen to get stuck, please feel free to reach out to me. But that concludes this walkthrough video. I appreciate your time and attention, and I hope you have a wonderful day.